If you're a small business owner, one of the biggest threats you face isn't from taxes or competitions. It's actually internal, from fraud, financial fraud, and accounting errors. Many small businesses lose thousands of dollars every year because they don't have proper internal controls. Welcome back to the channel. I'm Joe, a licensed certified public accountant with over 10 years experience in corporate and public accounting. I have an extensive background in accounting, audit, and taxes, and I'm all about helping you take control of your money and live smarter. Be sure to subscribe to the YouTube channel and turn on all notifications. And check out the blog site where we post every Monday, Wednesday, and Friday. Today, I'm going to walk you through what internal controls are, why they matter, and the 5 internal controls every small business owner should implement. So, let's take a look at what internal controls are. Internal controls are procedures designed to protect your business assets and ensure accurate financial reporting. They help to prevent fraud, theft, accounting mistakes, unauthorized transactions. Even if you completely trust your employees, internal controls protects everyone involved in the business. So, why do small businesses need internal controls? Many many small business owners think internal controls are only for big corporations. But according to the Association of Certified Fraud Examiners, small businesses are actually more likely to experience fraud. Why? Because they often lack proper oversight and financial procedures. And those internal controls matter more for small businesses because it leaves them more vulnerable to fraud, accounting errors, unauthorized spending, and financial mismanagement. Let's take a look at the 5 internal controls every small business should implement. And control number 1 is separate financial duties. One of the biggest mistakes small business makes is allowing One of the biggest mistakes small businesses make is allowing one person to handle all the financial transactions. Instead, divide responsibilities like receiving payment, recording transaction, and depositing funds. Each of these 3 transactions will be handled by someone separate, or if there is a little bit of overlap due to the size, you at least want to try to divide. Maybe who's ever receiving payment isn't the person depositing the funds, and whoever is maybe depositing the funds isn't recording those transactions. So you want to make sure you can separate them out as best as you can. This simple control significantly reduces the risk of fraud. Control number 2 is completing monthly bank reconciliations. Every business should perform a monthly bank reconciliation. This means comparing your account records with your bank statements. It'll help you to identify if there's any missing deposits, any unauthorized transactions, and if there are any accounting errors. And to take it a step further, you want to have a level of review as well in these bank reconciliations. You want to have the person who preps it sign off on it, and then maybe have a manager or supervisor review the bank reconciliation for any addition for an additional security, and they sign off as well. And then finally, maybe use the owner, or if there's another manager over top of the supervisor, if depending on the size of your uh, entity, who also signs off saying that they've reviewed the monthly bank reconciliations and didn't know any errors outside of that. These are good controls to put in place that help with identifying those items that may be missing or if there's any unauthorized transactions. Control number 3 is limiting access to financial systems. Not everyone in your business needs access to the accounting systems. Softwares like QuickBooks allow you to control user permissions. Only authorized employees should be able to approve expenses, process payroll, and issue refunds. And even within that, whoever approves expenses shouldn't be able to have access to the payroll. And whoever has access to approving the expenses and processing payroll shouldn't be able to issue refunds. You even can have controls within a control. That helps you to limit those access and even giving just viewer access to some folks maybe that do need it so that they can review just what they need to review, but they can't really do anything else besides viewer access. Those things will really help cut down on fraud and any unauthorized transactions that may occur. Control number 4 is approval for large expenses. Your business should have a spending approval rules. For example, if there's a purchase that's under $500, it will require just the manager's approval. Purchases over $500 will require the owner's approval. This prevents unauthorized spending. As an auditor, whenever we go in and we help our small business clients that are prepping for an audit, or maybe we're doing an audit ourselves over the internal controls for a small business client, this is one of the things that we always look for is there a large purchase approval rule or some sort of policy in place? These policies really do help cut down on large expenditures that may not have been approved by the owner, or maybe at the lower level that don't need an owner's approval. You really want to make sure you put this in place so that way it helps make sure that money isn't going out that shouldn't be going out, and that there aren't large purchases being bought without the proper going through the proper channels and being invested first. And control number 5 is reviewing the financial statements on a regular basis. Business owners should review financial reports regularly. This includes profit and loss statement, balance sheet, and statement of cash flows. This allows you to detect problems early and see maybe if there's something that sticks out on your profit and loss statement. Maybe there's a large expense that you didn't approve, or maybe sales are a little higher than what you thought they should be. Maybe there's something on the balance sheet. Maybe the cash balances are a little off. Maybe there's a loan that wasn't authorized that may be on there, or even in your cash flow statement, maybe there's an issue with cash as it's flowing through the business. Looking at these regularly, I would say on a monthly basis, every month as a business owner, you should be looking at your financial statements to see what is going on with your business and where does anything need your attention the most at. Internal controls don't have to be complicated. Even a few small procedures can help save your business from major financial heartache. If you're not sure if your business has the right internal controls, it may be time to consult with a CPA advisor. If this video helped you out, be sure to give it a like and subscribe for more small business accounting tips. And come back next week where we'll uncover red flags in business financials.